Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty, and everybody else. One moment. One second in YouTube. A little technical glitch here. I just have to make a quick adjustment. Is the stream okay now in Discord? Do you have video? Okay, Dan, one second. Yeah, I see what the problem is. Yeah. One second, guys. I can straighten this out. Okay, we should be streaming now. Are we okay? Okay, thanks everybody. Welcome to the Traders Lab, guys. I'm your host, Tom B. Sorry for the delay. A little bit of technical issues there in the Bookmap Discord Trader Lab community. Uh, call it pilot error. Uh, this stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. One second, please. Just a second, guys. I have a chart I'm trying to grab. It'll just take me a moment. I posted it this morning, and let me just find it. I think it was around 5:30 this morning. So let me get that, and then we will proceed, as they say. Okay, and I have it. Just have to drag it over. Okay. Sorry about that. Anyway, everyone, Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. It's about the business of trading. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars. And there's a link in the bottom of YouTube if you're inclined. There is no cost, so you might want to visit. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's get going right away here. The conditions are still rather choppy. So that makes that you have to adjust for it in the sense, and all this is posted in Trader Lab as far as what you might want to do. You reduce size. If this goes outside of your account risk parameters, then you should not trade. Go on sim during these conditions. Learn from it. Make adjustments. Also manage your FOMO. You're going to be impacted by the environment that you're in. Now, I want to start with the higher time frame, and by higher, it's all subject to what you perceive as higher time frame. For me, we're in a down market, and it doesn't mean, like anything, if a fundamental event or news comes in, it completely disrupts everything, and that's what happened yesterday. Uh, you'll notice that previous to this event, we had a consolidation up here, which is basically an auction. What's too low? What's too high? And the support was right there at that orange line, which is around 55. I think it's 33-ish. Okay. And then we broke out of it, and this became too high. Then we had our gap, and then we have our tariff lament. Uh, and we were heading south. So for yesterday, my orientation was to be selling primarily. Uh, and then we had news, and you could see we were kind of going down. And based on, and here's another little piece. Day before yesterday, we took out this high of this day the day before yesterday. So I was primarily on the longs in the morning to get into the stops and to possibly take the stops out here and trade into this gap. So that was my plan for that day before yesterday. Okay. So, and then in the morning yesterday, it was still a selling orientation based on the failure to get in here. Okay. So that was kind of the plan for the day. So for me, I was taking shorts, but also I was having some trouble with the shorts because I would get rotations, but they just weren't following through. So I didn't turn the boat around. I just, once I was done, I was not active in the afternoon. It just was very choppy, very volatile, and the risk management was just difficult because of the chop. The guys who were trading yesterday, it's pretty choppy. But then we got the news. Now, when the news comes out that the tariffs were going to be held off for 90 days, etc., that set up a huge short squeeze. So we came out above 53.14 half, which is this high, squeezed all the stops. And where did we come back yesterday? Now, there's nobody knows. This is part of the thrill of trading. It's all random. 53.33 quarter was what was too high previously, and it's the breakout of this consolidation. So that's where we went. Now, today, let's talk about today's plan. And this is posted in TraderLab. Here's the possibilities. Now, this is before the market opens and before even looking at the ETH. The possibilities were to open and get continuation buying. That's one part, and continue to squeeze. And of course, that doesn't mean it won't happen or can't. It's just part of the scenario. The other part of this was that if we open lower, we can trade two sides and have an inside day because this was a very disruptive event and this is all poorly auctioned. And then if we get back inside here, inside the consolidation, we can actually continue back to this line, which is the highest volume in the consolidation. So let's look at the symmetry. Highest volume here from a consolidation out there. This consolidation, highest volume is there. So far, it's still too high. This so far is still too high. And what is retail? This might be too low. So the possibility, and it's not a recommendation, is if we come in here, is to eventually come here. So if that happens, which it may or may not, we can have an inside day or we can fall out the bottom and continue on what might be considered the trend, subject to how you define trend. Hope that makes sense. And this is all before the market opens. This is all posted in TraderLab. And let me just see when that was posted, just to let you know. I threw it in there about 6 a.m. Central Standard Time this morning prior to CB. Anyway, hope that makes sense. Are you guys tracking? And if you have questions, by the way, please post them in YouTube. And I want to move this over. So in case we need it, I can bring it back. Let me just move that out of here for you. Okay. Now I'm going to show you something from the ETH, and if you have questions, please post them. Appreciate you guys visiting Trader Lab. And if you have questions, post them in there. Please give a like also. Thanks. Okay, this is the ETH, and I'm just going to pull this out of kind of left field because this is order flow related and subject to what you do. And when I say what you do, it's how you build out your trade plan. There's a lot of things you can do. Now, initially in the Trader Lab, what I do is I help traders with structured trades. In other words, how do you advance yourself in the pursuit of a business? Because what the Trader Lab is about is helping traders understand the business they're trying to be in and give you some tools that you can use to craft a business plan or a trade plan. And the idea of a trade plan is only trading when you have an edge. And then, of course, the outcome is random. And I always have to touch on this because most of us spend our development as potential traders, sustainable traders, looking for certainty and confirmation because we're all, risk adverse. It's normal, and we're wired, unless we have some kind of psychological tweak. We're all wired to avoid risk and seek certainty. It's just part of the nature. It works well out on the planet. It doesn't work here. So in trading, we actually have to accept that we're going to take risk, and we have to seek to take what I call intelligent risk. And that means risk that has a statistical probability attached to it for a positive outcome. However, the outcome of any individual trade is always 100% random. So the Trader Lab is helping. The idea of Trader Lab is to help you create a plan so you know where your trades or your edge show up. And your job is not to be playing a video game. Your job is to only interact when you have an edge that favors you. And if the conditions of the market don't favor you, your job is not to trade. Just the way it is. So I just showed you the higher time frame, and I'm just going to show you, this is just a little something. Right here, yes, this is yesterday's highest retail price. Think of it high volume. Well, in the ETH, let's just come back a little bit. If I test that price, that one, and the liquidity comes into the book, it can set up a potential short. Just saying. Now I'm just showing you behavior. Now, there's liquidity, there's location, and there's who knows. Let's watch this. It was to there. I think it was that one. Let me just make sure I got you the right one here. I think I do. I might have grabbed the wrong one out of here. There was this. This is the CPI. Notice the liquidity came in here. This sets up a potential short if you're using order flow. Just saying. Then we have pullback here. Liquidity comes in here in another break, and you'd be looking out here. And there was some other liquidity here. Don't know where it went. I think it was right here. Okay, so you could be trading liquidity with triggers and structure, and there's no precision. Just want to show you this. Now I'm going to get into the RTH. Now today was interesting, of course, and the volatility is annoying. I don't know about you. I don't like it. The chop, I should say. I'm good with the ranges. I don't like the herky-jerky kind of a thing, It's difficult. So I take more stops in this situation. I just do. And if I'm going to be in this environment, I have to widen my stops, and I have to kind of adjust for it, right? So let's look at the first trade, RTH open. Now, these are structured trades, and you have to vet these. There's no holy grail, no nothing. And I mean nothing, I mean nothing. So liquidity is here. Sell sweep suggests upside rotation, RTH open. This is called developing volume point of control. It resets to 0, and it counts the volume. So where the high volume is, for the developing daily time frame, if you want to think of it that way. And it's represented over here in the session volume profile. The yellow line is measuring where the volume is. And if you'll notice, as we go up, there's less volume. As we go down, there's less volume. And then there's just right. So this is retail. So the way this would work is if we go up, now right here, I'm looking for this. This is my first idea, is to think there might be some buying here and I might want to get long. Okay. So I'm thinking, well, two things. I have two trades here. One is to get to the ETH low, and the other one is to come up here. Okay. So I've got two ideas here. And of course, you're going to say long, short. I'm going to say, yeah, but let's look. So when I'm in this rotation, I have nothing here. I'm kind of going, what's going on? Two-sided trade. This suggested the move up. I do not take a trade. The open, if it's not opening in a way that I can interpret it well, I don't. Now, the other thing I was looking at is this liquidity sitting up here and this level here. So I know I can potentially come up here and check this. So I was thinking, okay, I got that. I have this below, and I have what else down here? Let's look. I have liquidity here. There was some other liquidity sitting in here. 53, I think it was, or so. I think maybe they came in later. And this is the top of the consolidation that we broke out of, 53.12-ish. Let me just grab it. I want you to see where these levels are coming from. Here. So that's where that breakout is. So this was too high, but we don't know for sure. Not that anything is for sure. And this was where we broke out, and often the market comes back, checks a breakout, and then continues. So, and again, the thesis for today is take out this high or inside day, and it can do anything. Remember, it's trading. Nobody predicts anything. It's always maybe. So, you guys have a question. It's posted, by the way. Please give a like if you're visiting in YouTube. Okay. So, looking for direction. The breakout or support is here that I just showed you. So for me, I'm thinking if we're above here, we can test this. I have over a 90% probability of getting here. I got about a 70% probability of getting there. I opened lower inside a range, and all these are possible. So until I know, I don't know because I can't know. So let's just look. Now, for me, remember, the trend is down. However, I have no idea. It's not my job. My job is to try to get an alignment, follow my trades. Notice the liquidity that's in the order book here. And you see it comes back in again. It is skewing the book. Now, I have this and I have this. So I'm going two-sided trade. Okay? Boom, boom, boom. Well, this is here. This is here. This is my kind of my sandbox here. So I'm looking, and what this is called specifically, and I'm seeing the liquidity. This is how order flow can help you. And that's pressure. It tends to skew the book. And it doesn't mean we won't just come on. I mean, there's none of this mechanical, it's going to do blank because something shows up here. They can pull and cancel, at a blink of an eye. But what's important is to notice what's here and the reaction and what comes back in at the same level in the reaction. This is how liquidity and order flow might help you. So I'm looking at the rotations and I'm thinking this is mean reversion. Mean reversion is rotational trading and it can be nasty, right? So let's look at the first trades here. Notice the liquidity comes in here and the reaction to it. So nobody knows. So when I'm sitting here, here's what I have that suggests to me the possibility of up. Sweep, test, liquidity. So right here, what happened was I had a sweep and I have my sellers, my sellers, my sellers. So now I'm looking to see what does this do and what happens to these sellers because they're being absorbed. Notice the liquidity. This sets up a long. and this is mean reversion. And I'm looking to come here, okay? So there's my scale, and now I'm looking for it to come out the top and take out the opening swing high. That's the trade. Now it's just one trade, doesn't matter. And I get taken out of it. I'm laughing because that's trading. So this is my scale. So I've got this, and then I'm under here. And I'm thinking to myself, okay, now we can squeeze, and go up to the other side. That's the thought, and that's not what happened. Now, there's another structured trade here. If this is support, and this comes back in and it fails here, then the possibility is for a continuation trade, and then I'm looking for this. So I took a short here, and I needed to clear this. So I get my short, and I'm leaning against the following: this and this, because these buyers were absorbed. So this is my lean. That's my short right here, there. So I get risk neutral, feeling good, looking good, and if I come above here, I'm out. I'm out. I'm just telling you this is what I did. I'm not saying this is a good idea. I'm just saying this is what I did. And now I'm back here again. So I'm looking at this. I'm saying I'm still in a rotational trade, mean reversion, mean reversion. And the thing is, it is mean. I come up here. I have a sell sweep, and liquidity comes in the book. Let's just watch the behavior. I took a trade here and here, actually, and I took a stop. Breaks down. I look at it again, put it back out again, just the way I take stops all day. I always say that to you guys. And then I put the short back out again. And now, coming for this. This is what, so in other words, the short here was going for that. You know, getting stopped out, life in the fast lane. So you can kind of see it. So here I'm seeing this for me is a trigger. I got my liquidity. I have this, and I put it in there, and it's like, why bother putting the order in? Just write the check out to the other guys, whoever they are. Break again, another trigger, come back, same trade right there. Now I get scalped. Just trading. And then going for this, and the liquidity is sitting right here. Okay? So I'm looking for this. Target. So that's. By the way, if anyone says they don't take stops and they don't tell you about the times they have bad days, now look at this. Now, I see this come in the book. I tested my breakout. I took a long. Now and I didn't get in over here. I was getting out. And I have my sell sweep, which also says get out of Dodge. If you're in Trader Lab, you know about these. If you have a sell sweep, liquidity, you've got to be sitting there with your finger on the eject button. But that was my target anyway. So here I come up, this liquidity stays in the book. I tested that outside edge of that breakout, and now I'm looking at this and I'm thinking mean reversion. So I'm looking to come back here, here, and maybe out the top. Just saying, just me, not saying it's a good trade. Just is what it is. So I have to find a place to get in. So I need a rotation, and my risk has to be somewhere out here. So it has to fit my risk parameter. And of course, I can enter elsewhere, but there's more risk of a stop because of the chop. So I come back down, and I take my long. And it was very hard. Okay, I was not crazy about it, but because I tested the top of that breakout of the consolidation, I thought this is a trade I had to take. all I can tell you. Because at that point, you know, when you have breakouts, how the markets tend to come back, check breakouts, and if they test them, and it could get in there and come out, whatever it does. But because of the sweep in this at location, you see, I wanted to get long for mean reversion. So that was my trade. I got long. Going here for the scale. And why would I scale at mid or VWAP? And I got a buy sweep. I would scale here because if the other traders, they will sell the mid and the VWAP. So I have to scale in case they're right, you know, which maybe they will be. Everybody has their day, as they say. So I see this, but that my target's already here because I might get sellers. So I want to be scaled in case the trade fails, and then I'm going to get something or scratch it. And it would fail under here because there was absorption. Liquidity hits it, and I'm having that, oh, I should have. You ever get that? VPOC migration. This is an important event. Now, there's two possibilities here. And this is auction market theory, and the volume profile is a chassis. It's not a system. You know, we all want, you know, but no. What it's a language of the market. So I'm scaled here. This comes down here. My stop is under here, and my teeth are chattering. If this yellow line, which represents the highest volume at the moment in the developing daily time frame, moves lower, that is suggesting this might be too high. And if it is too high, there's trouble. So when this shifts down, and this is not a recommendation, you have to vet these things. Here's what happens. This is my variable high volume node. There's two possibilities. When this shifts down, if I reject it, I'm going to hit the plunger and bail. Or I'm going to come back here, which a price that was too high, and check it. We went above, tested, and I held for this. And I always put it at maybe 2 ticks in front of it. And that was my target out of the trade. And of course, do I know it's going to do that? Nope. And by the way, I do trail by stop behind also. So that was the long. Now let's look a little further. What is the language of the market? Remember, I don't use indicators, so I had to learn to speak language. And like all languages, especially if it's fast, sometimes I can't translate it because the market runs away from me. So I'm looking at this location, and I'm going, well, if this is too high, I can come back here. That's what I know. So right here, I have my liquidity come in, and I get a sell, and it runs away from me. I cannot enter. Just telling you. So I got resistance here. I got a trigger here, and I'm looking for a short. And it's called mean reversion. It's outside in. So what am I leaning on? If this is the auction, I'm not paying that. You go to the store, and the price is here. Think of it this way. It's very simple. It's just random. The market's random. Auction is not complicated. And if this price is too high and they lower the retail price here, what happens if we come back to a price that might be too high? You might go, I'm not paying that. I want this price. That's called basically variable high volume node. And I made these up, all this idea, because I observed this in my research and I was trying to figure out what is that? Well, it's an opportunity to get short is what it is. So that's a short. Stop is out there. You're also leaning against this here, and because there was absorption here. So the idea of this, so you understand the concept, if I have absorption up here and liquidity at a location, if I come back here, am I going to get the absorption again? In other words, these sellers who took control here and were under the buyers, which is what sets up the short. So I have an entry potentially here or there, and the trade fails outside of there. So this is my area to stalk the trade, okay? sellers were here. Here's the point I want to make. If the sellers were here, and there's the icebergs, 10 buy stops, and I come back and I have 193 icebergs here, so this is the limit order book. They're selling. And if I come back, is it possible these sellers and these sellers will sell it again? Let's look at location. Remember, location, location, location. Not in the middle of nowhere. Location, location to here. Scale, okay? And then wherever. Let's watch it. Watch the liquidity. There's a sweep. When I get liquidity and a sweep, there's the possibility of a counter rotation. So I look at these and this as support and resistance. And it doesn't mean, it's just what happened here. And maybe if we come back to it, is it going to happen again? Now, as you guys know, I'm not bullish on the market, but that doesn't matter for a day trader. It matters to try to have a sense of what the quote trend is. Now, we all define that differently. Variable high volume node. And the reason we do that is because we trade in quote different time frames. But as a day trader, I'm trading in something called fractals. And I like to mention that because I don't use fixed time in the way I trade, because how long, and remember, long is in time means how much time does it take for the buyers and sellers to interact, and one side overwhelms the other. I'm not waiting for 5 minutes, 1 minute, 2 minutes. I'm waiting for whatever it takes for me to see the change. And when I see the change, if I can see it in a timely fashion, or I come back to an area where the sellers were active, I'm going to look to see if the buyers now take over from the sellers that were here, or if the buyers are absorbed. And as soon as I can read it in the order flow, I'm a short, because I have the least amount of risk if I'm wrong. The nature of risk-adverse retail traders, which is, by the way, all of us, certainty, is to wait and get in somewhere, wherever you get in, down here, and then your stop will be in the same place mine is, except you might have twice as much risk. That is the output of looking for confirmation, at least from my experience. So I found that confirmation is not part of gaming. Probability is part of gaming. Confirmation, because what you're looking for in confirmation, think about this. The casinos play games that have an edge, and our structured trades think of them like games. Well, do they only, when do they get confirmation? Only at the end of the game. So they just deal the cards the same way every time, because it's the only way they get their edge. If I can determine that I have an edge at a location based on the auction, and I can read in order flow when one side loses control, and it's only maybe, then I can execute here. That's a lot better than this, So anyway, I'm just saying, and you could learn that in TraderLab and its advanced processes. So too high, this is called VPOC migration. Now, this is important. Why do you ask? Why is it important? By the way, I forgot to mention something to you. At 9:30, we have something called the IB stat. Let me come back. I forgot all about it. This is a structured trade in the TraderLab, and it sets up at 9:30. Wherever the first hour low is, or the first half hour low, I should say, if we take it out, then the first hour low and high has over 90% probability of going south of the border. If that statistic holds up, it can be either the high or low. We can also take out both, but that's a different conversation at the moment. Then potentially we're going to take this out. And this is located at where I broke out. That sets up the possibility that we're going to go deeper if I can get under here. So let's see. So you have a short there, VPOC migration. VPOC migration, all this is saying potentially south of the border, and we have over a 90% probability of taking this out. So this short is going for this right here. And then here. So let's look at this. So this is a good short. This is a Trader Lab structured trade. You can learn these. It's in the 60 PDFs. I'll show them to you later. And the library of webinars. The idea of trading is not to be playing a video game, but to just interact where you actually have a statistical edge. So liquidity is here, front running this, and here I get a sweep right here. I come under, I get my sweep, I get my statistic. Right here, and I have liquidity here, and I'm looking also at 5,300 as because it's a strike price as a target coming under here. I'm just telling you that was my plan, that was my trade. I'm taking these trades and I get my sweep. Now I know there's a problem here. The problem is if I get a sweep and liquidity and these guys get absorbed, all these sellers, if I break above this, I can now mean revert. And we have another trade in Trader Lab called the IBF. It's actually it's mean reversion. And in this situation, it's counter trend. I typically don't take those. I just use them to get repositioned with what I perceive to be the trend. But today, because of this key location and testing it, because we tested it here and all we did was come down and test. So today I took the IBF. So I took along the scale here because I was thinking if we don't get back into this, then we can come across the range and squeeze. So that was the trade, IBF. It's called an IB failure. I made the terms up when I started doing this a long time ago. These things didn't exist as far as I know. So long here to here. Then I'm looking to come here and back here. Let's watch. This is structured trading. And like everything, who knows? And I got my scale and I got taken out on a trailing stop. And I tend to trail. So you know the way and this is not a recommendation, I look at like this is a triggering structure right here. This is a target. So where's my high volume? It's in here. Sellers were absorbed, you see? So I just tuck my stops under these little structures. So absorption, you see you make a higher high. This was absorbed. Otherwise, we would have gone down. So stop is here. This is absorbed. We go higher. So I'm thinking I'm good. Now I got you. Mid and VWAP is next. And, that's trading. So this one, now here, I'm seeing my sellers. Now up here, I see some icebergs. Sellers are now under these buyers. So the antenna goes up here. Buyers are here. Buyers were there. This is now microstructure. Support, resistance, looking for this, break low, trouble. Okay? And then ultimately stop. Okay? You guys with me? Now, there's more. Remember, this is a key location. You guys have questions? I'm just going to pause for a moment. How are we doing in YouTube? Please give a like. These are structured trades. You could learn this if you find it interesting. Looks like we're doing okay. Either you all fell asleep and your chins are on the keyboard, or you've been following the stream, or you've accessed the library of webinars, and now you know what I'm doing and where I'm going to do it. You can anticipate where I might trade, or at least the structured trades I show you here. The idea of the Trader Lab is to help you build out the business of trading, and you start one piece at a time. It's really a template. So once you learn process and which trades are qualified under what conditions, that's why trading is not generic in the sense of you always do the same thing because certain elements, if they're not in alignment, the trades don't qualify. Let me show you this. This is called the IB continuation trade. Now remember, I took the IBF, which is to here, it's mean reversion, looking for it to cross over and squeeze because we held that. Come up here, trade gets taken out. Hasta la vista, thanks for playing. Now, we have another trade here. If the IBF fails, then where was my buyers? They were here. Well, this liquidity comes in. It's the same place as this. This is part of order flow. And I have a sweep. So when I have a sweep and I have the order flow, what do I anticipate? Sweep and order flow, rotation, right? What do I get here? Sweep and order flow. What do I anticipate? Rotation. What do I get? Break. Is that a different behavior? I'm going to ask. Now, I have an advanced structured trade, the Trader Lab. Let me show it to you. Now I'm going to come back to where we were. Remember, this is what I'm leaning against for the long, and it is really support. Location, location. Okay, you're with me. Now, let's come back. There's more. This is a low volume node. What this suggests is this might be too low. This right here. So I'm going to draw a little line on here. I'm just going to give you a little more structure so you can see the piece. So inside of this is a consolidation, right? So I'm just bracketing this. You can kind of see how the profile and all this, where this volume shows up and what it all means. So that's why I'm doing this. Plus, I'm a wonderful person too. Hold on. So the volume is here. Support, remember, is here. And there's no clue, by the way, except this is a big deal. So for me, it was the target, and then, whatever. And then that sets up the IBF. And this could be your trigger. For me, I got in earlier, but this is a structured location for a long to there. I get in sooner because I'm actually operating here because of order flow. But if you can't read order flow, or you haven't yet taken advantage of what an order flow tool can do for you, you would be using this or this, either one. It's up to you. Less risk here, but also less probability it actually comes back here if you're waiting for the breakout, you see. So neither here nor there. So anyway, that's that. And this is support now. So now the point I was trying to make is what creates this consolidation is represented in the profile by the volume. It's an auction. Too high, too low, too high, too low. And this high volume right there is the retail price. Now, if we think of this in fractals or multiple time frames, it's shopping. If this is too high and this is too low, now we have support because we left this. And you can see, and that's where this low volume node comes in. Okay? This outside edge of this distribution. That's what these are, distributions of volume. See, our market is selling off. How about that? So here's support. Target, support, target. Now, no way to know. Low volume node. So if this comes down, it can come out here and then come back because the assumption is too low so far. So let's watch. So now you have the reasoning for all this. Notice what happens. We break through all this. And this liquidity, which was here, shows up again, and we break below it. What are we below? Now I'm going to move this over again so you can see structure. So I'm showing you the volume structure and the order flow structure. So I have sellers, sellers, sellers. Where's my buyers? Sellers. And this time I take out the liquidity and I'm under here, which was support. Is everybody with me? Are you guys tracking? How we doing? Dusman, good question. Stats were pointing north, and at what point would you say context overrules the stats? Context is number one. So the stats are ancillary. The context determines what you do. And statistics, you know, there's no 100% statistic. That's why stats are something we have, you might say, in the pocket. But we have to also look at the structure. And also, we have to look at yesterday. What was yesterday? And what didn't happen? Look at the higher time frame chart or watch this stream again, rewatch it, because we already knew about yesterday, not what will happen, but what did happen. We know it was a fundamental event that disrupted the auction. And then after calmer heads, if you will, prevail, and the shorts are squeezed out, and we're not up in that area but rejecting it, then, as they say, act accordingly. The context is not up. So we are day traders, but the context is not up. Context has not been up. And the fact that we get a news input that disrupts everything, unless there's a tremendous change, all it was a squeeze. And, that's why you always have to manage risk. But no, the long was fine for me. And the only long I had was the IBF because we had tested the breakout. Okay. That's the logic. Now we break below, and now what was support becomes resistance. So here I'm looking for short. Turn the barge around and short. Right here. Against this. This is a trade in the Trader Lab. So this is a trade that you guys might or might not take advantage of. This is a structured trade. Now you notice I'm not taking a lot of trades. I do take stops and I deal with it. And that's it. Overhead and cost of production. Liquidity comes in here. Now let's look at this. If this is too high, there's my liquidity, and I break and I test, it's a Trader Lab advanced structured short. If I come down here, same thing. Liquidity is here. I get a sweep here. Let's look at this one. And I'm always managing my trade. I just want you to know, always managing my trade. Where was our last short? Wasn't it here? Chop, chop, chop. Volume is here, right there. This is your outside edge. So for me, I take the short up in here. But if I was doing structured trade, I'd be taking it in here. In other words, the volume is here. The trigger is either here or here. And then you come back and you test. That's really your entry. And then your next target for scale, if you're using order flow or liquidity, would be here. And then you're holding, because now what happened? You're inside yesterday. You're inside the higher time frame consolidation. Let me show it to you again. And this says trouble in River City for the longs. And now we're in here. And where's the target? And this is all in Trader Lab. It's 5110. Here's how this works. That was too high. That's too high. And this is where we broke out of that consolidation. And then we had our gap. Yesterday, with the news event, what did we do? Fill the gap, squeeze, come back to the bottom of the consolidation and that high volume. Too high. Then it's either, continue north or come back and test this outside edge of this, which is what created the long for me. The only one I took today, which was the IBF, which I showed you. And then the failure of the IBF sets up the IB continuation trade and then using the liquidity to come back in here. And that sets up 5110 or whatever. And I don't know where we are at the moment. That's generally what's up. Okay? Not a recommendation. So anyway, these are all structured trades. You can learn this. and you have to do the job, and you really have to decide what you're going to do with yourself. If you're just triggered by emotions and you're making it up, you're not going to be in the business. I don't want to disappoint you. You're not going to be in the business. The idea of this business is you're really kind of like a sniper in a way. You're just waiting for your trade. And if you don't have a trade, you don't want to interact when you don't have an edge. Why would you? I mean, then you're just basically, like I said, playing a game. This is not a game unless you want to play a game. This is business. You want to be in the business. You have to know only get involved when you have an edge. And when you don't have an edge, why would you play a game that doesn't have an edge? Or better, worse, play a game that where the gamblers have the edge and you don't. But you will have random winners because gamblers have random winners. So anyway, back to the story. So all these are shorts. Now, this is another short here. If you're using advanced processes, you notice where we come? This is all Trader Lab methodology. You can learn this. And all it is shorts, 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 shorts. Now, here we take this out, or they pull, I'm sorry. And then we come here and we get a sweep into the liquidity. Now, here, you can do anything you want as far as your personal trade management. That's an individual thing. What I tend to do is manage behind high volume, like this. I get the sweep. I anticipate a counter rotation. If I take this out, I'm toast. The high volume is there. I come back and check it, right? Look where it is. Symmetry. Too high. Break. Come back and test again. Break. Going south. South, 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 south. This guy pulls, I think. Yep. And we come down here. This is pulling. What about this one? And then I get my sweep. And there's absorption here. Now, I have no idea. Don't think I do. Look, we had a sweep there, and you got the rotation. So when I get this, I anticipate the potential for rotation. I don't know. What do I know? When I say what do I know, I'm saying is it's random. So it's a guess. So the only way I overcome this randomness, because I can have a sweep. What about this sweep? Why didn't we make this move over there? See, that's the question. Now, here's the answer. No idea. If you're in that business of, I don't know, it's maybe it'll go up, maybe it'll just do that and continue lower, which is what it did. So now I'm looking at this and I'm thinking, okay, I'm below here. That's resistance. See the break and the test. Now, where am I? I have my sweep. I'm below here. This is resistance. See it? What's different between this and this? You see? Nothing. Except what happens. So here, the possibility is to trail, or you're trailing at a different structure. Okay? So I got taken out. I didn't get taken out. I should say I would be taken out. These are trades I would take. So the thing is, I'm thinking, yeah, I got the trade on. Well, didn't have this one. So now let's come down the food chain some more. Where are we? Oh, this is our target, and it's not a recommendation. 51, whatever, 10, I think it is, ish. Let me show it again to you. So you see, this is all on the chart before I can grab the chart. This right here is the next target, and it's like 51.10. Okay, it's right there. So we're going for 51.10, and it's not a recommendation. And the market could do anything. It could even fall out the bottom, the low from. There's stops under here, so you know we can take out yesterday's low and continue on the parade, which was before the news shorts. And it's not a recommendation because nobody knows. So if you know, look me up. I don't know. Are you guys tracking? Is this helpful? You getting something out of this? This is the Trader Lab. So this, be out of the trade and looking to put it back on again. Let's see where you can put it back on. Let's watch this. See? Isn't it amazing? So this happens, I'd be out. If I break below here, because I'm working this 5210 or wherever it is, 5110, don't remember now, wherever it is, I'd still be, I'm trading towards this. Why would I trade towards this? In the auction, it is fractal or multiple time frame. In the intermediate time frame, this is the highest volume. The market tends to come to volume because that's where there was agreement and most of the trade was done. So the market has a tendency to come back to these levels and check them. It does it in all fractals and time frames. This is the same thing in the daily developing time frame. That was too high, and we rejected it. Remember? Well, if this is too high, and this was the last place where it was fair in a higher time frame, think Matrushka dolls, then this is my target. And so far, I guess that's the low of the day, but I'm okay with that. That's another 40 points. And we don't have to ever do it. It's not the point. The point is I'm using the auction because I understand how the market works. I can't predict anything, and I don't know about the rotations. So I need to use order flow and structure and the volume profile, which is all this, to understand what it says. It's a language, and then interpret the language and attempt to get in alignment. This right here, let's just look at this little node sticking out, is a high volume node. Where did it come from? It came from here, which was support. If I break below support, now my shorts are here, but that's besides the point. But I'm coming back to the node. And what is a high volume node? Let me give you a little something here, and hopefully the light bulb will go off for you, because this is what kind of got me uh, enthralled with this. Because and it got me also to throw all my indicators away because I realized I was using a defective process for me. So no more. So no indicators. Order flow, but no indicators. So the volume is here. That variable high volume node I showed you, these levels that are created by the auction, is high volume, and then the price moves away from it. It's too high, right? It becomes resistance, and you saw what we had there. Now, as we go down in time frame or fractals, think Matrushka dolls, all this volume here, these little volumes are auctions. Too high, too low, retail. I'm not paying that. We leave. Too high, too low, too high, too low, retail. You got to be kidding. Down to the next one. Too high, too low, too high, too low, retail. This is the highest volume here, right there. So if it's too high and I get below it, and I had this over here, if I come back and check it, it's a short. And then where's my next area? The liquidity that front runs here for scale. See it? Watch. Where do I come? Back here. Now, I didn't draw a little line at the low volume node, but this is an outside edge. Now, theoretically, if you're not already short, this is, you could get short here if you have a way in and your stop has to be above the high volume node. If the risk doesn't fit, I mean, that's a big risk, right? You don't do it. Let's look here. So short, support, break low, sweep, same thing. Watch. Support, sweep, rotation. Support, sweep. We either do this or we fail. Don't know, not my job. Notice what we do. I can't tell what it'll do. It's not my job. My job is to seek alignment, manage risk, and go towards auction-based targets, which is this. So that's where I'm going, not a recommendation. Where are we? We are in real time. If you have questions, now is a good time to ask them. In the meantime, this is what I'm looking for. Okay? Not a recommendation. How we doing in YouTube, guys? How about a like? Helpful? How we doing? Any questions, guys? Please post them. If you're in Discord, say hi. If you're in the YouTube, say hi. Now let's watch this while we're at this. So let's watch. Now here's what this is. Out here is a low volume node. Stops are going to be sitting here. So what we want to be looking at is when we come up in this area, up in here, we want to see the behavior. And it might set up a short. It's not a trade recommendation. Let's just look. And I don't call trades. You don't need to take my stops. I take them all the time. I don't worry about it because I probe the market. And it's just my individual thing. It's not about being right. You're not in the business of right. You're in the business of discipline and edge. Different. Casinos deal the cards. They're not trying to be right. They're just trying to extract their edge. They do pay to gamblers. I take stops. You too. So this is our edge. Let's see what it does. Got to look a little bit closer here. So I've got this and this to be thinking about right up in. Let's just watch it. I have nothing here at the moment. So I got nothing going on. So you'll notice what happened here. Now there's no way to know about this. You see how you get the sweep? Oh, I'm getting a sweep. We got to watch it from the other side now. So let's watch out here. I got to see if I got a level here. Fairfax City, I don't know what would say the selling is over. In my fractal time frame, I'm trading rotations. So I know this now is the low of the day, and I'm looking for a short in this area right here. You see the sweep? But I don't have structure. I'm coming across all this structure, so I can come out here. This is a low volume node. Let's watch now for potential trigger. And I have to look left, guys. The reason you got to look left is where the stops. Remember how this works. Shorts are in this leg, so buy stops are in here. If we're coming up, now if there's longs coming in here, sell stops will be under here. So I'm still going to be looking for shorts. It's not a recommendation unless I violate substantial structure, and then I'm just going to not trade. I mean, if I don't have a trade, the fact the market's doing this is not a reason to trade at all. But your job is to only take trades that have an edge and manage them. Then whatever this is, if this isn't your trade, you're just going, well, that's interesting. And this is where you can lose a lot of dollars is just by saying, oh, I'm going to sell this. Oh, I'm going to sell that. Have you done that? That's amateur night. The professional trader says, okay, where's my next trade? Where is it? Where is it? Where might it be? It might be here. It might not exist at all. I might not have another trade today unless I get a trade. And I don't have a trade. I don't have a trade. I open up my trade manual, which has all my trades and structured trades in it. I look at the trades that are qualified in this current condition, and I'm watching this here. It's not I don't have anything here. And I can get a rotation this way. And why would I take a short here? Because I get a rotation? I'm not trading for that. I'm trading for that. So when you start impulsing in and going, oh, I think that's a short. Oh, I think that's a short. Oh, it's going to go here. Yeah, it might. But from where? So in the Trader Lab, if you've done the work and you're paying attention, you're going to know you're going to be triggered emotionally when you see this to think, oh, that's a sell trigger. I'm going to sell it here. Because it's going to go there. No, there's no trade. So your job's to go, open your manual that you've created, your trade plan that has an edge, and go, where's my trade that has an edge? Well, let's go look. Where is it? Where's the stops? They're out here. And where's the outside edge? It's out there. If I come up to the high volume, I might just rotate back here. So I have, and these are not structured trades. I'm just saying as I'm mentioning it. But there's no trade unless it's in your plan and it has a statistical edge. Let me ask you a question. If you owned a casino and you knew that if you played games with discipline the same exact way, that you would extract dollars from the other participants, and then you got bored and you didn't know what to do because you're sitting at the table, so you start making games up, how long do you think your casino would be open? You go out of business. That's what traders do. They forget. This is a business of edge. And if you don't have one, you're just sitting here as a tourist. Hard to do, isn't it? Because you're going to see like this little trigger developing. That's what you're seeing right here, a little trigger. But is this your trade? It's not my trade. So I can sit here and think, I think I should get short. Look, my sellers are here, but there's nothing here. And then it goes down. You say, I should have got short. I knew it. As soon as you're having that self-talk, if you know it, then you got to be able to answer. If you're sitting on the trade desk with me, and back in the day you would be if we were sitting managing dollars, and you said, I think it's a short, I'm going to say, why? Then I'm going to say, what's your stats on it? And if you can't give me an answer, you're not going to make the statement. You have to think the same way because now you're the trade manager, not me. So if we were sitting on a trade desk together, that would be the conversation. When you say, I think, well, no, the thinking isn't done here. The thinking and the preparation is done outside. So how do I know that the selling's over? I don't know until hindsight, so I can't do anything with that. Malik, if you want to set your Bookmap up like mine, just go to the Bookmap Discord Trader Lab community. There's a whole bunch of stuff there. You can see all my settings. And I tune my settings a little bit to volatility. I mean, they're not nothing is rigid in trading. Stops get widened in this kind of chop and volatility. You got to adjust risk and you got to just follow your plan. Part of a trade plan is also what's the volatility. I mean, normally I'm running about 3-point stops. In this environment, I'm running 6s, you know. So I have choices. I can just widen 6, keep my, based on my account size, just keep trading the same numbers or cut the numbers down. You know what I'm saying? Is so however I achieve the dollar number that I need that's based on my account size, I tweak it. And then if the volatility changes a bit and I need to see a little bit more detail or something, I tweak a little bit, but it's very minor. It's just, I just want to see what I want to see. So why would anybody take a short right here? You see what I'm saying? Stop. I wouldn't take a short here. I don't have a trade here. This is the problem we face is the stimulation and the emotional triggers, fight and flight, FOMO, because you're looking at this. So you take a stop here if you're someone who does not have discipline or a vetted trade plan or the discipline to actually follow a plan. And then you're going to be looking here. You've got the mid, you've got the VWAP. What are you going to do about this? How about you don't do anything about it unless you have a plan? Because you're sitting here waiting for your trade. You're not making it up. By the way, let's get this thing over here. Bookmap is eventually going to have this so when we put it on the chart, it just keeps going. So I don't have to go back and look because I can lose them. So now we want to look over here and just see for behavior. So what we're doing is too low, too low, too low, outside edge, high volume, maybe too high, but you got the mid. What's at the mid? Stops. What's at the VWAP? Stops. So we are going, so the thing becomes, and this is where your plan has to come in. This is an outside edge right here. Outside edge. Now, it doesn't mean it's a trade. And what this is called, so you know what this is, it's called mean reversion in a fractal. There's the mean right there, and there, right here. So there. So this is an outside edge. And when you get into rotational trading, in a fractal, it's outside in. Now, suppose you don't trade mean reversion. Then you don't have a trade here. I trade mean reversion. But I don't know. Remember I said low volume node out here. Notice the reaction at the node. See how it counter rotated? What else then? I come out here, next low volume node. I blew through it. Nothing to do. It becomes support. Too low. Where's the next outside edge? Here. Right here. What happens there? Whoop, right there. Rotation down. Break through it. Where's the next low volume node? Out here. Potential to come back there. That's the mean in this distribution. Now, I'm in a little more advanced idea here. And what have we been doing? We've been making the rotations and going higher. Making the rotations and going higher. Which one of these is the right one? I want you to tell me because I never know. So since I can't know, I have to then try to stay in alignment. So this sets up the rotation, and this is where you got to scale right there because that's the mean. It's called mean reversion. And the joke in Trader Lab is, yeah, it's mean because you could be selling this thing all the way up and either taking stops or getting scales and taking stops. And that's the nature of the mean. Notice the behavior. We got to the mean. See? So the primary part of this is coming back to the mean. That's the reversion trade. And either we break below it and continue to our target down below, right? You didn't forget that. Test the low of the day. Or we squeeze these guys out and come up for the mid and the VWAP. That's all I know. And I have to tell you, I don't need to know more than that because if I load more maybes into this, I get thrashing. So that's why I don't use indicators. I want to keep it as simple as possible. It is still going to be random whether I use an indicator that's lagging and maybe conflicting, or I just use order flow because I'm still going to take stops. But if I can get in quicker, I have less risk, and as long as the trade's qualified, which is to come here, I can get risk neutral. And then I'm either going to I'm going to scratch the trade, or this is too high and I'm now going to come down. So we'll see what it does. That's a mean reversion trade. It's not complicated. You know what it is? Random. Hope you're getting something out of this. It's Trader Lab. Yeah, Joe, that's a great comment there. One of our members in Trader Lab community in the Bookmap Discord was talking about trade plan and that the market is different and that you need to review your plan and make sure it's always in alignment with the current conditions. Now, here's the thing about Trader Lab. Once you build a vetted trade plan, then you got it. You can improve it. You can add more pieces, more trades to it if you choose. And I go over that sometimes with individual traders. Other times, I share some advanced aspects of this in the lab. In addition, once you build a template of how to do this, you can add to it and improve it. But you need to understand how to trade, right? So you see what this is doing? So this is why you would scale here. And then it's trade management. Comes out over here, the trade's over. That's that. Or you have another process for managing the trade. For me, the outside edge up here, and this is not a recommendation, is where the sellers took control. See, down right there. That's resistance, which is right there. You can see it, right? You can learn this in Trader Lab if you're interested in it. You can, if you're visiting in YouTube, thanks for coming by. Uh, you can learn this. This is where the sellers took over and the trigger is there. Now, for me, this is my entry if I was trading this because I'm using order flow. For structured traders, it's there. You see? Can you guys, are you guys following? Can you see how you might use this and how Trader Lab might help you? Thanks, Joe, for posting that. And everybody in Trader Lab who shares and posts their charts and their comments and their experience, uh, thanks for doing that. That's what makes the Trader Lab a very special place for developing traders. Um, I've worked pretty hard over the last few years to make it a professional community. And there's no nonsense in here. But the thing about it is, nobody can hand you like a schematic of here's how to trade, just do this. It doesn't work that way. You actually have to develop the confidence and the discipline. And that's kind of the journey. Now, most of you who are visiting today have been trading for a while. And it doesn't matter how long you've been trading. What matters is, and at least, and I always have to mention this because I spent many years using processes that actually didn't have an edge, but they had random winners. So I always thought I could do better if I just got more winners. Right. Well, the difference between random winners and statistical probabilities and edge is huge. So I was always trying to fix processes, but I didn't understand they were defective. They just were random. So if I'm in a random environment with a random process, I'm going to get garbage with winners, but garbage, no edge. So I can have winning weeks and multiple winning trades, but if I don't have an edge, I'm still going to lose. You know, think about the casinos. If the gamblers had the edge, even though the casinos collect money from the gamblers, they're going to pay more out than they take in. That's the business you're in. So it is not about a video game. It's about if you were owned a casino, what games would you play? I would think you might only play games that give you an edge, even though you will pay the gamblers. So you're going to have, you can have strings of losing trades as well as strings of winning trades. But if you actually have an edge, it'll show up. That's how casinos. That's why they're building larger casinos and can afford to give you the cocktails and the ticket to the buffet. And maybe if you leave enough dollars, they'll comp your hotel room and give you tickets to see Adele. And they still make a nice profit. It's something you need to think about. You should write it down because that's a business template that's already proven. We're not trying to reinvent the wheel. We're trying to run in a track. And if we know the track that works, that's the track I think we might want to try to align with. At least that's what I came to after many years of trying to fix defective processes. I always had winning trades. Everybody does. It doesn't take skill to have a winning trade. It takes skill to extract an edge and follow a plan. That's where the skill comes from. Anyway, hope you're getting something from this. This is the Trader Lab. And if you're interested in Trader Lab, there's a link in the bottom of YouTube. You can visit Trader Lab. There's no cost. Um, watch the buy sweep now. This is what the Trader Lab community looks like. Uh, there's a lot going on in here. Charts, posts, conversations, some humor, but it's mostly serious business. This is what the library of webinars looks like. Start with this one, and thanks Ned for curating the library. This is the primer. It's a high-level overview of a process, a little bit about me, my background. Not that important, but at the time I did this, back in whenever it was, 21 was it? I don't remember. But it has about 32,000 views. This one, Meet the Trader Lab. This is advanced trader education. Find out what it's about. Research, data mining. There's a lot more to it. And here's an example of just putting a trade plan together, uh, waiting for what was planned, and then doing the trades. You can just see it. And the other two you might want to look at is why most retail traders using indicators fail, and also Trader Groundhog Day. I think Trader Groundhog Day, it's not about showing you how to trade, which all of these do, or at least Trader Lab methodology. You have to vet everything for yourself. Some traders only take pieces of this, and it is not a right way to trade or wrong way. I think I can give you an opinion, though. My opinion is if it doesn't have a statistical edge, don't expect sustainability. If it does have a statistical edge, then you have to develop the discipline to execute it. Now, what gives you the ability to control your emotions is statistics because they're tangible. If you're kind of making it up, all you have is emotions. Fight and flight, greed. Notice where we come, not a recommendation. There's nothing here, okay? Nothing going on here. So it's something for you to think about. And you could use the link in the bottom of YouTube if you have inclination. So there's nothing going on here. We have a trader named Rod in the Trader Lab. We always kind of kid Rod because Rod trades broad swings. I tend to trade larger rotations myself because I need, I take stops and they're not large, but like everybody, we all take stops. So then it's, well, how do I get paid? Well, I mix fractals or time frames. Okay, we got to watch the behavior right here. Now, this is algorithmic behavior right here. It's not the same as resting liquidity. So these are brackets, this is algo. So this will drive you nuts. And I ignore it. This is what matters to me. What happens here? And there's no precision. Let's just watch this. See it? So I'm looking at that. And I'm looking at the high volume node there, which was too high. Are you guys tracking? Can you, if you understand it, this is learning to speak a foreign language. If you learn to speak the language, can you do something with it? But you have to vet it. This is your support, by the way. Watch it. And I'm not calling trades. I'm just pointing out sweep, location, and no precision. This is why you don't just throw an order out here and take a nap. You need to see whatever it is that you've put together. So what I do is I go location. Now this is a location. What happened? Nothing. So what happens here? This is the next location. What happens here? You see it? So if I get short there, because this is my trigger, test, or I get short here, stop, scale. And this could be a trade if you vet it. It's up to you. Just saying. Alan, I'll have to talk to you later about how to adjust the microcomposite. If you're in YouTube, guys, I appreciate a thumb up. Support the channel, subscribe to it. This is and now this is more advanced, but you can learn it. But it's not where you would start. You would, and it's up to you. There's 60 PDFs of these structured trades that I have put together. And it's, when I did this, it was just examples, it was nothing more than that. And there's multiple aspects of this in there, so it isn't just one thing. But these are actual trades I took, and some of this is not related to this. It was research I was doing with Bookmap developers, back in 2020, whenever this was. Yeah, 2020. But some of these are structured trades, and there's other things that are much more advanced in here, but they're not in the PDFs. They're in the Trader Lab because my thing is to help traders build out the trade plan and learn the business they're trying to be in, the realities of it, not the fantasy. I mean, you get a software tool, but now look at the order flow. This is a bracketing algo. That's a trade I was short at the time. And I'm looking at this bracket and I'm going, and I've got resting liquidity here, resting liquidity there. And notice what happens here. The liquidity raises, the liquidity pulls. This is the same actor, you might say. Well, right, you'll notice where I got out. There it is on Bookmap. And then the market went and exploded. Order flow can help you with those kinds of things. And it's not the ultimate solution of anything. That doesn't exist in our world. Wouldn't it be nice? So anyway, this is the last short, advanced process. So it's not a structured trade. It is an advanced process. When I speak to individual traders, they ask me about this. My first question is, how you doing with your vetted trade plan? And are you ready to move into more advanced methodologies and create more trades? If they're not successful and they can't show statistics or discuss intelligently, having solved for randomness and the ability to execute, then there's no reason to go into an advanced process. That's FOMO. When you can become consistent in your application of an edge, you will, assuming you have an edge and the discipline, you will extract dollars and potentially create sustainability in the business. You're going to have to roll your sleeves up and do the work. This is not a couple month process. It's almost like going to university. Trader Lab's an advanced process. What I share here, I'm trading going on 46 years, professionally and otherwise. I've also managed other traders, been on a trade desk, taught a lot of traders over the years how to trade. And it goes beyond what I share in Trader Lab initially, because the idea is for traders to succeed and build a platform, to understand the business they're trying to be in, the pitfalls, and to learn how to manage themselves and what the tools are to get that. So you don't need a lot of trades. You need one. So remember what this was from here to here. See? Now, so what can happen here? We can come back to the mid and squeeze, right? So this trade, subject to how you manage it, and that's all up to you, could be over if we come out above here. So let's watch. Notice the liquidity back in the book. Let's see the reaction to it. I've got about 3 minutes. If you have final questions, please post them. If I did not get to your question and you're in YouTube, use the link in the bottom of YouTube to visit the Bookmap Discord Trader Lab community. There's no cost for that. Download the 60 PDFs, start watching the library of webinars. And by the way, I know lots of times I get questions to actually do this in real time versus going over what happened previously. But the thing that's so important about this is the only thing we're doing now is based on what happened in the ETH, yesterday's RTH, today's ETH, and what's happening before we get to real time. You see, that's why I take you from the beginning, because it's a story that develops based on participant behavior. So if I just sit here with you and go, that's a short, that's a skip, which I can do, what does that do for you if you don't understand why? So that's why I don't do it, but I do it when I get to it. If you want to see real-time narration, there are a number of streams in the Trader Lab, 4 or 5 hours of real-time narration, starting at the open and going, or close to the open. You can watch those if you have the stomach for it. It's just real-time narration and trades, and it's all based on Trader Lab processes. So they're in there. So if you want to see real time, I don't have the time to do it now. I'm a full-time trader. So I trade and I post in Trader Lab to support the community. And if you're interested in it, use the link in the bottom of YouTube. You can visit Trader Lab. There's no cost. And it's a great community. So thanks again. Please give a like on the way out. Appreciate you stopping by the lab today. And I look forward to meeting you in the Trader Lab. But don't forget to like. It helps the stream. And it's a little way for you to give back. Thanks. Look forward to seeing you guys soon. Have a good day. And remember, always respect risk and only trade when you have a statistical edge. Take care, everybody. See you tomorrow.